Ever heard of a company making parts so tiny they're measured in millionths of a meter?
Millions.
Yeah. For clients you've definitely heard of.
Wow.
It's Azad Engineering Limited, and their latest financials are making some serious noise. We're diving deep into their Q2 FY25 performance today,
Okay.
using their press release, full financial reports, and investor presentation.
Got it. Sounds interesting.
Get ready for the story behind the numbers. Trust me, it's a wild ride.
Yeah, I'm excited. What's got you so fired up about this company?
Well, first off, Azad is shouting from the rooftops about record-breaking performance.
Oh, really?
Their revenue is up over 30% year over year.
Wow, that's impressive.
And profit, let's just say it's skyrocketing.
So not just good growth, but like accelerated growth.
Exactly. This isn't just good, it's accelerated growth. We're talking standalone revenue hitting 11,114.12 million Indian rupees in Q2 FY25. And if we look at the consolidated picture, it's even higher at 11,115.35 million.
All right, so give me some context here. How does that compare to previous quarters?
If you look at just the first half of the fiscal year, their standalone revenue is almost double what it was this time last year.
Okay, that is huge GE growth.
Right. That's massive. And it points to some serious momentum for Azad Engineering Ltd.
Definitely. So it's got to be more than just luck. What's fueling this rocket? What's their secret sauce?
Well, Azad Engineering is playing in a league of its own. They're not making everyday stuff. They're laser-focused on industries where precision is everything. Think aerospace, defense, energy.
Ooh, high stakes.
We're talking 0 parts per million defects, the kind of quality that's needed when failure just isn't an option.
So they're not cranking out widgets. They're crafting these incredibly intricate, essential components. Makes you wonder, what's the competition like in this space?
That's where it gets really interesting. To reach Azad's level of expertise takes serious time, money, and know-how.
Yeah, I can imagine.
It's a massive barrier to entry for competitors. Think about it. These huge companies, Siemens Energy, Honeywell, Mitsubishi, they're not going to trust just anyone with mission-critical components.
Right. The stakes are too high.
Azad has built a reputation for reliability that's incredibly valuable.
So they've got this super specialized niche. But they're not just sitting back and writing this outright. They're out there snagging major deals, which suggests even bigger things are on the horizon. I'm dying to hear about some of these wins. What do they got?
You're right. They're not resting on their laurels. One deal that really jumps out is with Baker Hughes. Not only did they sign a Memorandum of Understanding, or MOU, to set up a whole new facility for manufacturing precision components,
Okay.
but they also locked in a 5-year agreement to supply a Baker Hughes subsidiary with crucial parts for the oil and gas sector.
Whoa, hold on. This MOU was exchanged with Saudi Arabia's energy minister present.
Yeah.
That's not just a business deal. It's practically a geopolitical handshake.
Yeah.
Okay, what other wins are we talking about here? This is getting good.
Hold on tight, because the list is impressive.
Yeah.
There's a 5-year, roughly $83 million agreement with Mitsubishi Heavy Industries for advanced turbine components. Then there's Siemens Energy, who've signed on for a 5-year deal for crucial parts for their gas and thermal turbine engines.
Wow.
We're talking multi-year commitments here. That's a recipe for stability and consistent revenue.
For sure. Those long-term contracts mean a lot. These aren't just wins. These are long-term partnerships. It says a lot about the trust these industry giants have in Azad Engineering Ltd.
Yeah.
What else is in this lineup?
Well, Honeywell Aerospace has jumped on board, too. They've awarded Azad a contract for manufacturing and supplying incredibly complex components for the aviation industry. Phase 1 alone is valued at a cool $16 million.
Okay, so they're racking up some serious wins here. Anything else?
Then there's Rolls-Royce, who've inked a 7-year deal for defense aircraft engine parts.
7 years. That's a pretty serious commitment from Rolls-Royce.
And get this, they've even got a contract with India's gas turbine research establishment, the GTRE, to manufacture an entire advanced turbo gas generator engine.
An entire engine. That's a huge step for them.
Right. It sounds like they're weaving a pretty intricate web here, strategically branching out beyond their usual offerings.
You're picking up what they're putting down. They're known for their expertise in turbine airfoils, no doubt, but their recent moves show they're strategically diversifying.
So it's not just about airfoils anymore. They're playing a bigger game. What does this diversification mean for their bottom line? How's it showing up in the financials?
Well, take a look at their financials, and you'll see their aerospace and defense work is booming, almost double the revenue compared to last year.
Wow, that's a significant jump.
This tells me they're tapping into something big here, spreading their risk and setting themselves up for some serious future growth.
Okay, so they're winning big contracts, diversifying their portfolio. It's all very exciting, but let's not forget the foundation. Are they managing their money well amidst all this expansion?
That's the question every savvy investor should be asking. And from what I see, they're playing it smart. Their balance sheet is strong, a clear indicator of their financial stability. And they're putting their money where their mouth is, investing in two massive new facilities with significant area expansions. One, almost 95,000 square meters, the other around 75,000 square meters. This shows a serious commitment to scaling their operations.
Expansion like that usually means big expenses. What's the impact on their financials?
You'll notice an increase in their depreciation expenses, which makes sense given the investment in new facilities. But here's the key. The depreciation is directly tied to expanding their capacity, which ultimately means more potential for revenue growth.
So they're playing the long game.
They're playing the long game, and it's paying off.
And how are they managing their working capital, the lifeblood of any manufacturing operation, especially one growing this fast?
Their working capital days have increased, but that's to be expected with such a significant jump in revenue. It actually suggests they're managing their working capital quite efficiently to support this rapid expansion. They're not overstretching themselves, which is a great sign for long-term sustainability.
So we're seeing record-breaking performance, strategic specialization, smart diversification, and a solid financial foundation. It all sounds a bit too good to be true. What do you think?
Well, remember, no investment is without risk.
Right.
But Azad Engineering Ltd. is definitely presenting a compelling story so far. What's jumping out at you at this point?
What strikes me is their laser focus on precision engineering in these absolutely essential industries. It's like they found a sweet spot where demand is through the roof and competition is struggling to keep up.
And they're using that position to strategically expand their reach, not just in terms of products, but geographically as well.
And they're doing it with their heads on straight, carefully managing their finances and not overextending themselves.
Exactly. They're demonstrating a balanced approach to growth, which is a green flag for long-term investors. But this is just the tip of the iceberg. We've only scratched the surface of Azad Engineering Ltd.'s story.
All right, folks, buckle up. In part 2, we're diving into the potential risks and opportunities facing Azad Engineering Ltd. as they ride this wave of impressive growth.
We'll be taking a closer look at their long-term strategy and analyzing whether their success is built to last. Stay tuned.
We just saw Azad Engineering Ltd. crushing it. Record profits, strategic expansion, the whole 9 yards.
It's pretty impressive.
But let's not get ahead of ourselves. Every investment has its risks. What are we seeing on the flip side of this success story?
That's the million-dollar question, isn't it? One thing that jumps out at me is their customer concentration.
Okay, tell me more.
They're heavily reliant on a few big players.
Right.
And the industry's known for their ups and downs.
So if one of those giants stumbles,
Yeah,
it could send shockwaves through Azad's business.
exactly. Imagine, for instance, the aerospace industry hits a rough patch. Air travel demand plummets. Airlines start delaying or canceling orders for new planes. That puts pressure on companies like Boeing and Airbus.
And if those behemoths are hurting, they might tighten their belts, which could trickle down to Azad, who supplies them with essential parts.
Right. And it's not just aerospace we need to consider. The energy sector is in the midst of a massive shift as the world embraces renewable energy sources. This could impact demand for traditional gas turbines, a key market for Azad.
So even with their diversification efforts, they're still vulnerable to these larger industry trends that are completely out of their control.
It's a valid concern. Another potential challenge is the fierce competition in these industries. Azad has carved out a niche for themselves, sure, but they're not immune to competition from other global players.
And staying ahead of the pack requires constant innovation, investing in new technologies and processes. Falling behind could cost them market share and those sweet, sweet contracts.
You got it.
Yeah.
And let's not forget the elephant in the room, the global landscape. We're living in a time of geopolitical uncertainty, trade wars, and all sorts of potential disruptions.
Yikes. That's a lot to juggle. Azad makes a good chunk of their revenue from exports. Any hiccup in global trade, whether it's tariffs or sanctions, could really hamper their ability to reach those international customers.
It's a complex web of potential risks, that's for sure. Industry-specific challenges, global competition, geopolitical factors. It's a lot to keep an eye on. But remember, risk often comes hand in hand with opportunity. And Azad Engineering is strategically positioning themselves to capitalize on some major growth areas.
Okay, let's switch gears and talk about those opportunities. Where are they poised to make some serious waves?
One area where they're already making moves is the aerospace and defense sector, specifically in the Asia-Pacific region. This region is expected to see a surge in defense spending as countries modernize their militaries and invest in cutting-edge technology.
And with Azad's expertise in precision engineering and their experience working with companies like Rolls-Royce, they're perfectly positioned to ride that wave.
Exactly. And their recent contract with India's GTRE to manufacture an advanced turbo gas generator engine is another signal that they're becoming a trusted partner for domestic defense programs. That could unlock even more opportunities down the road.
It seems like they've found a good balance between international and domestic growth.
They have.
Hmm.
Another promising avenue is the continued demand for gas turbines, particularly in emerging markets.
Okay.
While the developed world might be shifting towards renewables, many developing countries still rely on gas-fired power plants to meet their growing energy needs.
So even as the energy mix evolves, there's still a healthy market for their core expertise in turbine airfoil.
That's right. And Azad is being proactive, expanding their capacity with new facilities to meet this demand. They aren't just waiting for the market to come to them, they're actively shaping their own destiny.
And their move into the oil and gas sector is another smart play for diversification.
Absolutely. As long as the world needs oil and gas, there will be demand for specialized drilling equipment and components, which is exactly what Azad is supplying to companies like Baker Hughes.
So despite the potential risks we've discussed, Azad Engineering Ltd. seems to be playing their cards right, leveraging their expertise and positioning themselves for growth in these dynamic markets. But what does all this mean for the investor looking at their portfolio? What do the numbers say?
That's the question we're here to answer. Let's dive into their financials and see if their performance is built to last.
Okay, time to talk numbers. We saw impressive revenue and profit growth, but is it all hype? Or is there substance behind the headlines?
Let's start with their top-line growth. Their revenue from operations has been steadily climbing over the past few years. In FY24, it reached 3,407.7 million Indian rupees, a whopping 40.6% jump from FY21.
That's a phenomenal growth rate, especially considering the global economic headwinds everyone's been facing. But revenue is only part of the picture. How about their profitability?
Now, their profitability is where things get really interesting. Their EBITDA margin, basically how much profit they're making compared to their expenses, is steadily climbing. It hit 34.5% in FY24. And their PAT margin, which is pure profit after everything is accounted for, has more than doubled in the past few years, hitting 17.2% in FY24. This shows me they're not just growing, they're becoming more efficient and profitable as they scale.
That's music to an investor's ears. It indicates they're creating value, not just burning through cash. But what about their balance sheet? Can they handle this rapid growth without over-leveraging themselves?
Their balance sheet offers a lot of reassurance. Their debt-to-equity ratio has remained pretty stable, which tells me they're not taking on excessive debt to fuel their expansion. They're being responsible with their finances.
And we talk about their strategic capacity expansion, which is driving up those depreciation expenses. Is that something to be concerned about?
Not necessarily. As long as that expansion translates into future revenue growth, it's a sign of a company investing wisely for the future. They're laying the groundwork for continued success.
So they're not just sitting on their cash, they're actively deploying it to generate even more growth. But what about their working capital? We saw those working capital days fluctuate a bit. Is that a red flag?
It's important to understand that their working capital can fluctuate due to the nature of their business.
Okay.
They often have large, long-term contracts, which can impact the timing of payments and inventory levels. It's not a simple higher is better or lower is better situation. You need to analyze it in the context of their specific business model.
So we need to look beyond the surface and understand the nuances of their operations. It's not always black and white.
You got it. Overall, their financials paint a picture of a company that's not only growing at an impressive clip, but also managing its resources efficiently and maintaining a healthy financial position.
So we're seeing impressive growth, healthy margins, a strong balance sheet, and strategic investments for the future. It sounds like Azad Engineering Ltd. is checking all the boxes for potential investors, but as we always say, there's more to a company than just numbers.
Absolutely. The numbers tell a compelling story, but they don't reveal everything. We need to consider the less tangible but equally important aspects of their business.
Okay, let's shift our focus now and delve into those less tangible but crucial elements of Azad Engineering Ltd, their leadership, their competitive advantages, and their approach to innovation. Those are the factors that often determine whether a company can turn potential into long-term success.
You're spot on. Let's start with the people at the helm. Who are the key players driving Azad's strategy and execution? What kind of leadership are we dealing with here?
We left off talking about Azad Engineering Ltd's leadership. Who's calling the shots and steering this ship?
Well, at the helm, you've got Rakesh Choptar, the chairman and CEO.
Okay.
He's been with Azad since 2003, and he's racked up some serious accolades for his leadership, including the Young Asian Entrepreneur Award from CNBC TV 18 and the Making India at Matterbar Award.
So he's not just a figurehead, he's actively shaping the company's direction and vision. That's good to hear. What about the rest of the leadership team?
We've got a diverse and experienced board of directors with backgrounds in engineering, finance, and law. And their management team is a great mix of industry veterans and fresh perspectives.
Okay.
They've got people with experience at companies like GE, Siemens, and Godrej, which means they're bringing a wealth of technical expertise and a deep understanding of their customers' needs.
So they're blending that seasoned experience with new ideas, which sounds like a recipe for innovation. But let's move beyond the people for a second. What about Azad's competitive edge? What sets them apart in the market?
They've built a reputation for exceptional quality and precision.
Right.
We're talking over 3 million mission-critical parts delivered, with a 0 parts per million defect requirement.
Oh.
That's a level of precision that's almost unheard of, especially in industries where even the smallest flaw can have huge consequences.
It's mind-blowing when you think about it. We're talking about parts so precise they make a Swiss watchmaker look like an amateur. But in industries that are constantly evolving, just being good isn't enough. You've got to stay ahead of the curve. How is Azad Engineering Ltd approaching innovation?
They're not just resting on their laurels. They're actively investing in new technologies and processes to keep pushing the boundaries of what's possible in precision engineering. They're using advanced machining techniques like 5-axis CNC milling and ultra-precision turning and grinding.
So they're embracing the latest and greatest technology. That's essential in a fast-paced industry like this. But are they limiting themselves to internal innovation?
They're actually going a step further. They're expanding their in-house capabilities to include specialized processes for metal joining, heat treatment, and even painting and coating.
So they're becoming more vertically integrated, controlling more of the process from start to finish. That can give them a real edge in terms of quality control and lead times.
Exactly. And they're not just innovating in a vacuum. They're actively collaborating with their clients on design and development, working as true partners to create innovative solutions.
That's smart. They're not just taking orders, they're actively shaping the future of their industry by working hand in hand with their clients to develop cutting-edge components.
They are. It shows a deep understanding of their clients' needs and a commitment to pushing the boundaries of what's possible in precision engineering.
All right, so we've got strong leadership, a talented and experienced team, a reputation for excellence, and a dedication to innovation. All those factors point to a solid competitive advantage. But let's zoom out a bit. What does Azad's long-term growth strategy look like? How are they planning to navigate the challenges and opportunities that lie ahead?
Well, they've laid out a multi-pronged approach that focuses on 3 key areas.
Okay.
First, they want to deepen their relationships with existing customers, become more than just a parts supplier.
Become a true solutions provider.
Exactly. Second, they're strategically expanding their geographic footprint with a particular focus on the Asia-Pacific region.
That makes sense. We've talked about the growth potential in that region, especially in the aerospace, defense, and energy sectors.
Right. And lastly, they're leveraging their core competencies to carefully expand into new product lines like oil and gas components and defense aircraft engine parts.
So they're not just jumping into any new market that comes along. They're choosing their battles and making sure they have a competitive edge before diving in.
Exactly. It's a measured and calculated approach to growth.
But even with the best strategy in the world, they can't control everything. What are some of the external factors, those macroeconomic forces that could throw a wrench in their plans?
The global economic outlook is always a factor.
Right.
A widespread slowdown could dampen demand in their key markets.
So despite their diversification efforts, they're still susceptible to the cyclical nature of these industries. It's a reminder that no business operates in a bubble.
Exactly. Inflation and rising input costs are another concern. If the cost of raw materials and labor keeps climbing, it could squeeze their margins.
And that could make it harder to compete on price, especially against those global giants.
You got it. And let's not forget about geopolitical risks. Trade wars, sanctions, political instability, those can disrupt supply chains and create headaches for any business operating on a global scale.
So they're facing internal challenges and external pressures. How are they planning to navigate this complex landscape?
They're taking a multifaceted approach. First, they're diversifying their customer base.
Okay,
So they're not overly reliant on any single client or industry.
smart move. It's like spreading your bets, reducing their exposure to any single point of failure.
Exactly. They're also proactively managing their costs. They're investing in automation and process improvements to boost efficiency and reduce their reliance on manual labor,
Okay,
which can be unpredictable in terms of cost and availability.
so they're controlling what they can control.
And they're keeping a close eye on global economic and political developments so they can adjust their strategy as needed.
It sounds like they're not just focused on growth, they're building a resilient and adaptable business that can weather the storms that inevitably come along.
That's what separates the good companies from the great ones. The ability to not just survive, but thrive in the face of challenges.
So what's the bottom line for investors who might be considering adding Azad Engineering Ltd to their portfolio?
It's crucial to remember that every investment carries inherent risks.
Of course.
But for those seeking exposure to the growth potential of the aerospace, defense, and energy sectors, Azad presents a very compelling case.
They're operating in industries with high barriers to entry. They have a proven track record of delivering top-notch products. They're financially sound, and they have a clear vision for the future.
All true. But as always, do your own research. Carefully consider the risks and opportunities before making any decisions.
This deep dive has provided a glimpse into the world of Azad Engineering Ltd. But there's always more to explore. We encourage you to dig into their full financial reports and investor presentations.
And as these industries continue to evolve, it'll be fascinating to watch how Azad adapts and innovates to maintain its leading position in the global precision engineering landscape.
Azad Engineering Ltd. May not be a household name yet, but with their specialized expertise and strategic vision, they're definitely a company to watch. Will they become the next hidden giant? Only time will tell, but it's a story worth following.
And that's what makes the market so captivating. There are always new discoveries to be made, new opportunities to seize, and new stories unfolding. Stay curious, stay informed, and keep diving deep.